Unleashing the power of PVSRA strategy. Trade like the market maker. Discover how the PVSRA strategy can revolutionize your day trading and scalping techniques, providing a competitive edge in the market. Contents. What PVSRA stands for. Advantages. Disadvantages. How to use for day trading and scalping. Conclusion. PVSRA, what the PVSRA stands for. Price, volume, supporting, supplying, resistance. The PVSRA strategy stands for price, volume, supporting, supplying, and resistance analysis. It is a trading strategy that analyzes price movements, volume, support, and resistance levels to identify potential trading opportunities. How PVSRA works. PVSRA is not a standalone strategy, but a toolbox that allows traders to detect market manipulation by market makers and understand when to enter the market and in which direction it may move. The strategy focuses on the interaction between price and volume, as well as support and resistance levels, to make trading decisions. Advantage. Helps detect market manipulation by market makers. Aids in understanding when to enter the market and in which direction it may move. Disadvantage. May require a deep understanding of price action and volume analysis, which can be challenging for beginners. May not be a standalone strategy and may need to be used in conjunction with other indicators or tools. Using PVSRA for day trading and scalping. Traders can use PVSRA to identify entry and exit points for day trading and scalping by interpreting price and volume action. The strategy can help traders make informed decisions about when to enter and exit trades based on the analysis of price, volume, and support resistance levels. Now, let's switch to TradingView together, and I'll show you the PVSRA strategy live on various charts and trading pairs. For example, with the Bitcoin USDT Binance chart. Why the Binance chart? Because Binance simply has the largest trading volume. Let's start with the strategy now. Here on the chart, you can see an indicator that shows you the volume in the individual candles. For example, if a candle is green, there is at least 200% more tick volume in it compared to the other previous candles. The same applies to the red candles. One component of the strategy is to plot the highs and lows as well as the wicks. We use a drawing tool called Horizontal Ray for this. You can find a detailed video on how to use TradingView in detail here on my channel. Now we draw the wick low point and support with a line. Now we do exactly the same and draw the wick high point and the resistance again with a line. If we now calculate the range between which Bitcoin moves back and forth, we see just under 1.8%. If we now measure the range of our resistance zone, which acts as a stop loss, and the range of our support, which also serves as a stop loss, and calculate this as an example with a 10x leverage, then we know how high our risk management is. Here in this case, we have a spread of 0.19% for our resistance range and 0.55% for our support range. As I said, with a 10x leverage, this makes a risk of 1.9% in the case of a short trade or 5.5% in the case of a long trade. Both can be too high a risk for a trade, so we switch to a smaller time frame, for example the 15-minute chart, to see if we can make our resistance area and also our support area a little smaller. In the case of our support area, it actually helps if we look at a smaller time frame. Here, we can immediately see that Bitcoin has found another support area in addition to the large wick. Now, we only have a risk of 0.21% instead of 0.55%, which brings us to 2.1% with a 10x leverage. If we now go back to the 4-hour chart, we can take another look at the upward and downward wicks, as well as the support and resistance areas. I'll draw the wick and the resistance here first. Now I'll also draw the same for the support. The resistance area thus comes to 0.9%, which, as before, is almost 10% with a 10x leverage. The support area looks almost the same at 0.82%. As the risk is too high for us in both cases, we try to use a very small time frame, such as the 5-minute chart, to identify areas that help us to improve risk management. Again, we look at the resistance and support areas. Once again, looking at a smaller time frame helps us to minimize our risk. The 0.9% has now become a good 0.4%. This may still be too high a risk for some, but it helps immensely to build up a better risk-to-reward ratio. If we now want to open a long position, we have two areas that we can consider, depending on our personal risk management. Either we take the large wick into account and set a larger stop loss, or we leave it out and concentrate only on the area that the small time frame has shown us. Our upside target is either conservatively the daily open or, with more risk, the M3 level. Even with the daily open as our target, we arrive at a risk-to-reward ratio of almost 4-to-1. At the M3 level, it's a whopping 5-to-1. That's how good risk management works. Now let's look at another chart to see the PVSRA strategy in another example. I choose Chain-Link in this case. First, let's move away from the small time frame and start with the 4-hour time frame. Same game and same rule as we just applied to the Bitcoin chart. We mark the wicks at the support and resistance, as well as the actual support area and resistance area of the last formed structure. If we calculate the range, the upper zone of resistance may still be acceptable, but at support we have a much too large area that would serve as a stop loss due to the large wick. This is unacceptable and would blow up our account relatively quickly. That's why we're jumping back to a smaller time frame and looking around for other support areas. First, let's take a look at the 1-hour chart. If that doesn't really help us either, we go down to the 30-minute chart or the 15-minute chart. Perfect. The 15-minute chart again gives us more detailed information on where the support levels are. The risk management may still be too high for a good entry, but by looking at the smaller time frame, we have the opportunity to choose a completely different entry point compared to the 4-hour chart. Let me take out the one support line from the 4-hour chart for a better view. With the PVSRA strategy, we have also managed to mark two areas in a completely different asset that can serve as entry points with excellent risk management. If we now draw our long trade, we place our entry directly at the support line and set our stop loss at the second support line. Depending on our own risk management, we can take the EMAs as our target, or rather a little higher, depending on our own risk preference. I hope you like the strategy, and you can integrate it profitably into your trading routine. Let me know what you think in the comments, and don't forget to subscribe for more helpful tips and trading strategies.